Hello and welcome. Today we're going to look at the Bitcoin cycle with Euler's exponential as well as Bitcoin chart and indicator update. We will have a brief look at Ethereum as well, follow up on Solana and the potential Elliott waves development, the Chainlink trend and the trend for altcoins in general. First, a reminder that there are no financial advice on this channel. It's just me sharing information for educational purposes. First out then, where are we in the cycle and how is the cycle looking? And for the cycle, as you may know if you've been here before, I am mainly using Euler's exponential to track it. Already back here, when we had some data in, we did the prediction. So this green line here that you see in the middle is a prediction line that I've been predicting where Bitcoin should go for 2 years now. So far, it is hovering around this line very fine. This dotted line are confidence limits, where we expect to find 95% of the data between the lower and upper band here. As many times before, when we're getting close to this band, the statistics tell us it's more likely that we should go up than down, as long as we follow Euler's exponential. And previously, we have been doing that 24 to 32 months. In 2017, it was 32 months. 2021, it was a little bit shorter before we started to break out from it. Then we resumed it, and then we broke out again. Now, this time around, we have been following it exceptionally well, maybe even better than 2017. But what I'm looking at now is that when we get an all-time high here, which we got, what I want to see is some push to the upside. Now, this did happen on the weekend, but I really want to see some kind of push up here. Because if we do not have that, there is a risk or chance, depending on how you trade, that we get this round top. And the round top in this case will actually take us down to some danger area of actually breaking this cycle from its exponential growth. We can see the other sideways consolidation look a little bit like round tops going sideways slightly down for quite some time, even though this time I've shortened a little bit every time. But the other tops started on the upper band here. This top started on the prediction line, so we do not have the same room to go down this much. We need to kind of prove ourselves here. So far, so good. We did get this uptrend, but what I would like to see is that we do not break all-time high, as we just did, and then nothing more happens. We need this liquidation push, and we need people to jump on the train. With that said, you can see the last time we were in this situation, we did have a push up. It didn't hold, then we went down deeper, and then we got the injection to higher. The time before that, it was the opposite. We did do a deep dive, and then the next dip was a little bit higher, then one a little bit higher. Now we're doing something a little bit between. We have two almost on the same level. We had one example when the second dip went deep, and one example when the second dip went higher. Now we are a little bit in between. All of them had 3 dips though, so we could expect in that situation some type of dip up here or a little bit up here that goes down a little bit, and then, except if we have this case, we will get one deeper, then we'll probably go down a little bit deeper and then eject out. All of them was expecting this other dip to go a little bit deeper. You will see that when I show my trading chart, and you also know if you've been on the, at least if you've been on the Patreon channel, how I was trading, that I had some trades here at 110, but I also had next at 104. We turned around before that. And the main difference for me when I'm trading both these dips when we're close to the line and all these 3 is really where we are in the cycle, and also how much we've been pulling back from the top. Here we had 30% pullbacks, and that we have not had here. It's a little bit more than 10 only. If we would have a 30, it would go quite outside Euler's exponential confidence band here. So trading wise, I do as always, trying to buy the dip, even we didn't catch the absolute dip here. But you can see how I put in, have 4 trades in here now. All of them are locked with stop losses in profit. You can see the high stop loss here is at almost 121, which you see here. I did also have a trade in here and somewhere here. They have been taken in profit simply because I've had my stop losses on a couple of trades very high. So when the market pulled back, those were taken out in profit. And I often do that. If I have a handful of trades in, I keep some close to take a profit. For example, here when we went all down, some of them took good profit, where others were just in a few percent of profit in case of the market to not pull back. All these trades are on 5x leverage, which I do not recommend anyone start with. You should always start with no leverage when you're trading, even though I'm not giving any financial advice at all, of course. The difference though up here compared to when we were lower down on Euler's exponential. So the main difference, what I showed you now, is the entries in this area. The main difference from the entries when we were lower down here earlier on is looking like this. You can see here how it was much more aggressive when we were at 78 and even more aggressive when we were down to 74. All those dips, and this is just a picture, an old picture, that is why it's already painted red there, because I used it for a video that I did back then. But I just want to show you that is kind of how I weigh in the difference, because in the middle of the cycle 2024, my estimates of break over the cycle of early top was very low. So every time we dipped down, I was buying very aggressively. Now I'm a little bit open-minded for a blow-off top, could continue for a long-term cycle also, yet there is still some chance or risk that we will just roll over without any really decent top. And that is the main reason for not buying so aggressively. If you compare this one with this one, you see the difference here. And also, if we have either get a blow-off top, or if we just continue to circle up in this bull run, there will be plenty of time to add more trades. Even more if we add the blow-off top, with that one will go very high above here. So there's plenty of time to just add more trades. Sure, it will be better to add them all down here, but it's always a risk-reward ratio. And this is individual. This is why I trade. You might do it in a different way. I know many do it in a different way. But for me, as long as all trades are locked into a profit, so if the market falls, the stop loss is executed in profit, then I just keep adding one at a time until I'm just all in. And that is all in on 5x leverage. That's still quite a lot in my book, at least. I know some play around with much higher leverages and much bigger amount also, relatively speaking. Multiple accounts, I do pretty much the same on all of them. So to summarize, everything is perfectly following Euler's exponential. The cycle is perfectly on track. But what I really would like to see is that when we break all time, we get a more push. Now we broke it, but nothing really happened. It was the weekend, that could be the explanation. So if we break it again, I really would like to see some more push. If not, I will move more of my stop losses up and take more profits. And then I will start all over when we hit this one again. Of course, very mindful about that this is actually a little bit of a weak move if we roll over now. Every time we do not manage to get over this line, which we have not really been over for a long time now, it could be a sign of weakness. Or it could be also be a sign that we need to be patient. I often talk about that. Patience is really the key. But with that, I'm just trading lighter. Because if I was impatient, I would just trade heavily here. When in my assessment, the risks are a little bit higher because we're higher up. If something goes wrong, it goes more wrong compared to when we bought at 50 or 74. Distance down to the ground, so to say, was not as high there. And here you can see all the buy zones, and these buy zones here have been the same since when we were up here. I was announcing the 74k and the buy zones you see here, and this also. So it's just a reminder if you haven't seen my videos before. What I'm also would like to see here is that if you look at both RSRs, we're using the top one here is RSR 4. We simply change it to 4. Here's the standard below on 14. And usually what happens when we get this, when we're breaking out, is that this one was a little bit higher up here, which means oversold, and that is a sign that the market should go down. So people either sell or take short. With this one, we have our own interpretation of this one. Anytime above the 50% line, it means we are in upwards trend. It means that we are more likely to go up than down. So when these two disagree, which they usually do not, if you look at it here, they've been agreeing all the time. But when they do disagree, this one say up, the other one say down, we usually go up much more explosive. And we have seen quite a number of examples of that. One was here when we had oversold and bearish divergence, but you can see we just went up. And this goes all the way for this entire bull run. We have looked at this many times before. Every time we have those explosive moves up, you can see that we got oversold and bearish divergence while the market just kept going up. And this have helped to keep the market going up because many people trade with the standard RSI. The same here again. If you remember this time, we're at 50 and then we just scooped up. And this have also helped us to mark these lines every time where we think the next bottom is. I will come back to some of the details in videos during the next week here. If we just have a quick look at Ethereum, you can see we have been following a linear trend line for quite some time. Haven't really managed to break out of it. We're a little bit stuck between this resistance at the previous short-term all-time, not all-time high, but the recent highs, and the all-time high, which we also just nugged and then fell down. No real explosive move after that. And as you know, if you've been on this channel, that last time I bought was on the lower bandwidth regression line, and then I sold here. I might go into it if we are breaking all-time high and the speed picks up. But right now, when it goes sideways, you can still trade that. I just feel I can just as well trade Bitcoin then. That, in my humble opinion, is behaving in a more predictable way and have a better risk-to-reward ratio. Ethereum and many others goes up more when they go up than Bitcoin. But if I also include the risk of the downside on the altcoins and also include that my predictive models work better for Bitcoin, mainly because there are so many big players there. For me, then, the risk-reward ratio actually is better on Bitcoin. I'd rather add some leverage on Bitcoin than trade with altcoins in many cases, but not all. And as I indicated before, we will, if everything plays out, do a big short here later, perhaps this year. Not on Bitcoin, but on some selected altcoins. Solana, we had this idea quite long time ago that this might be an Elliott wave. And so far, these lines here haven't moved in for quite some time. You can see that we're following this Elliott wave quite precisely. The big question mark, though, is if the count, if you just look in a textbook, they would have started the count here with the first wave, which in that case means if this was the first wave, this will be the fifth and final. If that is the case, this correction will look like this. However, if my count is correct, we will then break this recent high level here and go up. And because of this uncertainty, I haven't really traded much Solana either. It's the same here. I bought at the bottom of the trend line. I left here, at least the ETFs. Then I went back in somewhere here, locked things with stop losses in profit. So when we went down here, those were triggered. And then I said, I will not go in again now, simply because I'm not, this is my main case, but it's like 60-40, which count is more correct here. So therefore I stayed out of it and monitoring it. It's the same here. If the market goes crazy and we get it off top, I think we break all-time high. And then after that, it could be that we have those few weeks when things just go straight up. Then I might enter it again, one trade at a time, lock them in profit before I enter the next time. That way I is managing the risk. Chainlink is also going in a linear trend line. And it is quite interesting that it's among the bigger cryptos, it's only Bitcoin that is growing exponentially. The other are growing in a linear fashion. Last bull run, Ethereum, others were also growing exponentially. And I've gone through the underlying reasons for this, the fundamentals, why this is the case right now. It could change, but as long as it hasn't changed, this is still my main case, which means if I will buy Link, I will buy it and time here in the red side, and I would sell it to put in stop losses up here. So I'm not entering right now. Same here though, if we break this trend line and we have a banana zone for a few weeks, then I might enter this one also for a short term. And we can see on the total cap, excluding Bitcoin, Ethereum, and stablecoins, that we're also trapped in this linear trend line. We are fully within it. And the same here. If I would just buy some random alts, I would have been buying them when we are in the red zone here, not in the blue. In that case, I'd rather wait for some confirmation that we are starting to go bananas up here. You can see though that this is a true trend lines. You can also do it as one big trend line, but then you will see that when you draw this first one and you extrapolate it, it actually misses the prediction quite heavily, which is understandable because down here is 0. We can't have 0% altcoins, can we? So these trend lines, even though it starts as linear, it mathematically have to start to cling out. It doesn't mean per se that this slope starts to cling off. Doesn't mean that we have an Altseason starting, because it has to do that. It will look like this regardless, simply because we can't go down to 0%. That will mean that we have no altcoins left, just Bitcoin. That's quite unrealistic. Seeing if Bitcoin will just go straight up from here, altcoins wouldn't do anything, we would still get this trend line going down and then going down a little bit less, going down a little bit less, and almost going sideways. But if we do break out from whatever trend line we're in and prove that we are now breaking out of it, well, that is a good sign that now things are happening. So the way I trade is that either I'm early and buy when down here, or I wait until we are in a euphoria zone. I usually do not try to trade in within here, because often you have momentum indicators saying momentum is up. But when you're trapped, you have so many people saying momentum is up, then it goes down. Momentum is up, they buy, and then we go down. And they just keep getting fooled and rug pulled over and over like this for Bitcoin too, especially for Bitcoin. That is why 3 million Bitcoin have been lost by experienced crypto traders to the big institutional players. My apologies, 4 million Bitcoin have been lost. And if you include the treasuries, that is because most of the time they've used RSI and momentum indicators, and they've been buying close to the local tops like this, and then panic selling at the dips, which you can see clearly if you look at when the big money are buying. They're buying dips, and if they buy then now someone needs to be selling. It's impossible otherwise. And the only someone that have enough Bitcoin, 4 million Bitcoin, it's not the newbies, it's not mining, it's the experienced crypto traders, unfortunately. Yes, that was it for today. If you're on Patreon, I will come back during the week where we also will look at the principal component analysis. Probably we will look at Monte Carlo simulation also, that's a long time ago. And also I will show once again how we figured out the previous bottoms, some 50 and 74, but I haven't explicitly said anything for where we are right now. There's a reason for that, and I will explain that reason and where I will put it if I still have to make a guess, because the 50 and 74 level were quite clear to me based on some indicators that we have in the chart. But those haven't been as clear where we are right now. That's also part of why I'm trading more cautiously since Euler's exponential. I will come back and explain those details for you, and those things are quite easy for you to see in the chart as well, since they are available in the standard trading view or whatever you're using. Anyway, thank you very much for watching today. Please like, comment, all those things, and hope to see you all soon again.